This conference will now be recorded.
All right, so just going over a quick overview of what you guys should have been watched over the weekend or last week sometime was the top-down analysis. So in trading, we always want to look at the bigger picture. Always the bigger picture. Why? Because the bigger picture always tells a story. Now, that's where the top-down analysis comes from. So we always want to look from our market down to our sector to our stock, because what the market's going to do is going to affect our sector, and what our sector is going to do is going to affect our stock, and vice versa. But the market, whatever it is, whether that's the NASDAQ, the Dow, S&P 500, whatever your market is, crude oil, that is going to dictate where your sectors are going to go, right? So there's a saying that when the tide is high, right, it lifts all boats, and the tide is going to be your market. So when the market is going higher, it's going to lift all boats, which is going to be your stock, right? Your stock or your sectors, it's going to lift them higher. It's going to go up with them because the market's going up, and the market is a average of all the stocks in the market. So if it's going up, that means in general all the other stocks are going up. So it's this idea where, you know, the tide's going to lift all the stocks. So if your market's going out or it's going to break out or whatever it is, you do your analysis on your market. You are seeing if it's going to break out, is it going to pull back, whatever it's going to do, your sector and your stocks are going to follow. Okay, sometimes you have outliers where, you know, it'll be doing something different than the market because of news or something else, but in general, whatever your market's going to do, your sectors and your stocks are going to do. Okay, and then your sectors are like your big brothers to your stocks. You know, whatever big brother's going to do, little brother's going to do, majority of the time. Now, sometimes it might not be that, but majority of the time it is. Now, you should have went over Market Watch, choosing your spouses, okay, and then all your indicator setups. All right, so our top-down analysis, we go through the monthly, weekly, daily, right? We establish our biases. All right, on our monthly, are we bullish? On our weekly, are we bullish? On our daily, are we bullish? Or are we bearish? Which one is it? Okay, we got to note that on each one. Are we bullish or bearish or neutral? You know, are we bullish or bearish or neutral on our monthly, weekly, and daily? And then we go to our sector and then our stock, and we do the same thing. We need to get an idea of are we monthly, are we bullish or bearish on all these different time frames, higher time frames, and then we could make our biases, right? And in doing that, that gives us a stronger opinion of what the stock is going to do, right? If we're very bullish on our monthly and weekly and daily on our market, sector, and stock, then we're going to be long calls, you know, very few, if any, small hedges on puts. Now, if we have our market bullish on all time frames, but then our sector is very bearish, and then our stock is, you know, kind of in a consolidation, then we don't want to play that stock, right? We want all of our sectors and markets to hit on the same time frame. So if they're all bearish, then we're gonna be more likely to go in puts, right? Our bias is gonna be towards puts. And if we're all bullish, then our bias is going to go towards calls. All right. So just a quick overview of that. And before we get into our next lesson, does anybody have any questions over the second lesson, the top-down analysis and the indicator setup, before I get into the lesson 4?
Yeah, I had a quick question, Steve. Can you hear me?
Yeah, loud and clear.
Can you just kind of briefly go over like the stochastics? Because I know it wasn't inside the PDF. You switched it with the CCI. So if you could just like
Um,
briefly go over it.
did you hear me talk about it in the video? I think I went over it pretty thoroughly in the video.
Yeah, yeah, I did see how if it's like below 20, it's oversold, and when the lines cross it, signaling a reversal. I was more confused along the yellow line and the white line. That was mainly what I had a question on.
So what's the question on that?
What's the differences between the two? Like, what's the
One's
white line
fast,
and
one's
what's
slow. That's about it. One's fast,
got
one's
it?
slow.
Yeah,
It's really nothing to do about it. We're just looking for crossovers. So one's fast, one's slow. They measure the same thing, just one's a shorter time frame, one's a faster time frame. So when the shorter time frame is crossing over the longer time frame, that's typically signals a bottom, right?
cool.
So if we're below
Thank
the
you.
20, let me go to. So if we're below the 20, right, and our fast is going to cross over our slow, that's typically signals a bottom, right? So here, the signal the bottom here, and that was pre-market, and then market, it kind of popped up, made a higher low, and then kind of went up again. Now, it's not a foolproof, but it is a very useful and it works pretty well actually. The stochastics. I used to have CCI, but I switched it out for stochastics because the stochastics works a lot better. Momentum with the CCI and the momentum gauge pretty much tell me the same thing. So I switch it all out for the stochastics. Stochastics tells me where there's bottoms, and it's pretty accurate when it comes to bottoming out. So for instance, let's see, if I go 15-minute here. So 15-minute chart. So we see that we went below the 20. The fast stochastic went below the 20 here. The slower stochastic came and hit the 20, but the fast stochastic switched over, crossed over there, and then we kind of bottomed out here, tested that same thing, and then kind of went up from there. Let's see a better one that crossed over the 20. Here's one that crossed over the 20 here, came down fast below, and then here the slow came below the 20, fast crossed over the 20 here, pre-market, right before the market opened, and then market opened, it rallied on up. So the stochastics typically help signal a bottom. Now, you're not going to just use that blindly. You always want to look at, is it at support? Where is it at? We don't ever use one thing on its own. Not ever. Because just because one thing is saying one thing doesn't mean that it's going to happen. So we use all of this in conjunction with each other. Price action is king, so we're looking at price action always. Price action, and we're going to learn today about candlesticks and how we use them, bullish reversals, bearish reversals, and where we're going to look for these. Okay, so stochastics, strictly, I use it for bottoming out, finding bottoms, and also seeing where the momentum is with the stochastics. So if it's like halfway here and it's looking like it's bottom, I don't really trust it because the stochastics needs to come down to the 20 before we start heading up higher in the price action. Does that answer your question?
Yeah, I did. Thank you so much.
Okay. Any other questions?
Steve, I have one. Can you hear me?
Yeah.
Yeah, okay. This is just with the top-down analysis. How you just said it like a couple of minutes ago. If your stock is doing something different than your market or your sector, like for example, today, Nasdaq and XLK, they were both moving up. Towards the end of the day, they were still moving up, but Apple was kind of consolidating. But I noticed Tesla was still going up. Would that be like a backup for Tesla? Like Tesla's a more solid trade at that certain time than Apple, since they all three were lining up. If that makes any sense.
You sure Apple was doing pretty well today? You sure?
Towards like the end of the day, towards like the last couple of hours, like last probably hour and a half.
Apple was going straight up. Maybe what's that? Maybe last hour it was going
Yeah,
sideways, but I
and I
mean
noticed Tesla was shooting up more.
that's just a bull flag. It's just setting up a bull flag. It doesn't mean it's not doing anything.
Oh, okay. Okay.
But that's a strong trend. I mean, that didn't break that trend all day until after hours, which is just going sideways, and it's setting up a bull flag to potentially pop higher.
Yeah. Okay.
And let's see. Tesla went, I mean, Apple and Tesla look pretty similar.
Yeah, they both had pretty solid uptrend. I just saw a little bit more movement in Tesla. That's all. That's all I was pointing out.
Okay.
Yeah.
All right, any other questions? No other questions? All right, so let's get into lesson 4. So let's get in here. Go. So lesson 4, we're going to talk about bullish and bearish reversal candlesticks. So candlesticks, right? This section will cover bullish reversal patterns. These types of patterns are found at the end of a trend lasting 3 to 5 days minimum. Now I say 3 to 5 days because I'm typically looking at a daily chart, but it's typically 3 to 5 candles. So any trend is going to be at least three candles, and it could be 3 to 5, but can be longer. Now remember that 3 candles form a trend, whether up or down. In this situation, we are considering the downtrends as these are bullish reversal patterns. So don't let the green fool you. We're going to be looking at downtrends and the reversals from there, because then that's when you turn into a bullish trend. So we're going to be looking at bearish trends bottoming for bullish reversal to form a bullish trend. Okay, a trend needs to be established before any reversal of a trend can occur. These bullish reversal patterns happen at levels of support either already established or being formed currently. So the size of the bodies are very important, and the length of the wicks gives us perspective of the buyers and sellers and who is in control. Now the size of the bodies are very important, and the length of the wicks give us perspective of the buyers and sellers and who is in control. So I want you to focus on this middle candle. Well, actually, let me see. I think I have let me come back here. Go. Oops, wrong one. Here we go. I have the wrong PDF. I have an old PDF. Let me switch it up here and get my newer one here. All right, so lesson 4. All right, lesson 4, bullish reversal. Here we go. So this big green candle, that is a bullish engulfing candle, and that candle forms when the buyers have been in control all day. Sellers were not in control at all. So that tells you that basically the demand is very strong. Okay, so it opens up, and from the moment it opens, buyers take control and they push it all the way up all day until the end of the day, and they close, and that shows how much demand there is in the market because it leaves no wicks, and it opens and closes. It opens at the lows and it closes at the highs. That's very bullish. Okay, now we have the next candle, which is going to be on the bottom of a trend. This is going to be a bottoming tail candle. Now this tells you a story, right? Each one of these candlesticks tell you a story. Now the story is, here we're on a downtrend. Remember, the candles are going down, the price is going down, so that means what? There's supply in the market. So supply in the market keeps going down, keeps going down. Then this candle here, it opens right here, and then it sells off all day, right? It sells off all day, okay? Continuing the bearish trend, right? Downtrend. So it sells off all day, and then towards the end of the day, it reverses from the lows and pushes all the way back up to the open, to where the sellers took it, and up a little bit more, flexing the strength of the buyers. So not only did the sellers take it all the way down, but the buyers came in at those lows and pushed the sellers out of the way and showed the buying strength of the demand. So they pushed it all the way up and more, creating a candle that is suggesting there is very, very strong demand in this reversal here. Okay, so you gotta remember that each candle has a story, especially if it's a reversal candle. Now this candle in the middle, this is just a typical bullish candle. Okay, this could be a piercing line reversal, which we'll get into later, or it could be a bullish engulfing. Even though it has wicks on it, it could still be a bullish engulfing. It's just a general bullish candle. All right, now, it opened up, pushed up. Well, it actually opened up and actually pushed down, and then pushed up, and then pushed up a little bit more, and then sellers pushed it down a little bit and closed that day. Okay, now the next candle, second to last, is called an indecision candle. Now, this is called an indecision candle because the buyers and sellers on this candle are pretty much equal. Nobody took it for the day, really. So even though it's a green, it's still telling you that the buyers and sellers are fighting with each other for control. So here we opened up, the sellers took it down, then the buyers took it up, and the sellers took it back down, and then the buyers barely got it up, just to close right in the middle, just slightly up, showing that the sellers and the buyers have no real control, right? They're equal right now. They're equally strong, or they're equally weak. Whatever it is, they're equal. So typically in a candle like this, indecision candle, we have to wait for the next candle, and whatever that candle is going to be is going to establish our trend, whether that's going to be a trend reversal or trend continuation. That's what our candle is going to be. So we always have to wait for the next candle on a indecision candle, because even though this could be a trend reversal, the trend could continue down if the sellers still maintain control. And I've seen it happen before. All right, now the next candle, the last candle, that candle is an inverted hammer on a downtrend, right? it's going to be something different on a bearish reversal, but on a bullish reversal, this is going to be called an inverted hammer. Now, there's the story about this one is the buyers open up and they push up and they continue to push up all day, right? Which is forming one of these first candles, right? This big bullish candle that opens and closes at the lows and the highs. Now here, this one's forming the same thing, but then at the end of the day or towards the end of the day, remember that the sellers, this is a bearish trend and we're in a downtrend. So the sellers are typically in control. Right here, it's showing you that the buyers are in complete control. But then at the end of the day, the sellers push it all the way back down, but can't close them out, right? They can't close all the buyers out. So it pushes it all the way back down on its last like hoorah, right? It's the last strength that the sellers have to push this down. They're using everything they got to get rid of these buyers and maybe close it red, but they can't do it, and it closes as an inverted hammer, and then typically we reverse and continue the bullish reversal. Okay, so let's get into some of these. So first we have a doji. So a candle like the one below here is referred to as a doji. Now, Doji Candle has specifics. It opens and closes near the same price, creating a very tiny body with wicks on the top and the bottom, right? With no body, so it could close at the exact same price it opened, so it had no body, or very minimal body. Now, the requirements here, we need a trend, 3 candles down, okay? Now, body is at or closes near the high of the day, and this one did that. The lower wick is longer than the majority of the body, and you don't have to necessarily have that on a doji, but this reversal you do. Now, a doji could have equal size wicks on the top and the bottom, and close with at the same price, creating like a little cross. That's a doji as well. But that is an indecision candle doji, right? All right, so confirmation is a close above the candle's high, okay? Now, can anybody tell me why would our confirmation be a close of the next candle above the previous day's high or the reversal candle's high?
Creating higher high, higher lows.
Excuse me, say that one more time.
Creating higher highs and higher lows.
Right, so you're gonna be on a downtrend, right? And then that downtrend, that reversal, you're gonna get above that high. So now you're not gonna be creating lower lows and lower highs. You're gonna start making higher highs and higher lows. Exactly. So that's your confirmation candle. That's confirming the uptrend. All right. Now we have a hammer candle, which is very similar to a doji, but it has a very a larger body than the doji. It acts the same way. It's treated the same way. It doesn't necessarily have to close green. It could close red. It just has to have a long tail at the bottom. Now, I typically call these bottoming tail candles, but they're called hammer candles because they look like a hammer. I like to be called bottoming tail candles because if it has a long tail at the bottom, all that tells me is there's high demand. There's high demand because the buyers keep buying it at the lows and bringing it back up. Buyers keep buying at the lows and bringing it back up. That means there's demand. Wherever this keeps hitting, it keeps getting that demand. So that's very bullish. So it's technically called a hammer candle, but I call it a bottoming tail. And on the flip side, when it's the opposite, when you're at resistance and it pushes you down, I call those topping tail candles. So here, bottoming tail candle as a hammer. Same thing, at least 3 candles down. Body is at or near the high of the day, and it could be a large body. The lower wick is longer than the majority of the candle. And then the confirmation of the trend reversal is another candle closing above the high the next day or the next time frame. Whatever it is, the next candle needs to close above that high, and then that's going to start the formation of the uptrend. All right, now we have the inverted hammer that we talked about earlier. So this candle, one below, is called the inverted hammer because it looks like an upside down hammer candle. Now, this specific candle opens and closes near the same price level, creating wicks at the top and bottom with a longer wick at the top. This type of candle can usually form by a sell-off from the highs of the day and pushing lower than open and close negative even, which can show indecision in the market, signaling a possible trend reversal because sellers were in control, but you could see at this area right here, it's just been kind of consolidating, chopping. So that's like good support because it doesn't want to break that level. So it gets below that level, but then starts forming these inverted hammers, which are basically sellers trying to push it down, and then buyers, buyers pushing up, and then sellers keep trying to push it down. But you notice the stock does not want to lose this level, meaning that there's too much demand right there. And then it pops up and it starts to rally. Confirmation is a close above that high of the candle, and then it should start that uptrend. Next bullish reversal pattern is a bullish harami. Now, this one is called a bullish harami because it looks like a pregnant candle. Okay, this specific candle has a large selling body and then a smaller inside buying body, right? Positive day body. The small baby body sits inside the larger candle's body, the mother. This setup indicates the bears are losing strength, and now they're going to give birth to an uptrend, right? So the big sell-off candle is the mother. The little bullish candle inside the candle is going to be the baby, and that's going to be the new trend. So here we have a bullish baby inside the bearish mother, and that's going to give birth to a uptrend. Okay, and confirmation is the next candle over closes above the baby's high, not the mom's high, but the baby's high. Okay. Then we have a bullish engulfing candle, which it opens below the previous candle and closes above the previous candle. Same criteria. We need at least 3 candles down. Here we need a gap down and then a close higher to eat this candle, and we need that gap down and close higher, no matter if it's only a couple cents. Yes, it matters because the market's not going to do anything that it is not supposed to do. So anything that it ever does, it's supposed to do it. Okay. So here, the bullish engulfing candle, it doesn't need a confirmation candle. It confirms itself, but I have found it very useful to actually have that confirmation candle, and depends on the situation. But typically, it's useful to use that confirmation candle because sometimes you'll get some chop. You'll get a bullish engulfing candle, then you'll get a bearish engulfing candle that will eat your bullish engulfing candle, and that's the only one that could cancel out that bullish engulfing candle. So sometimes you'll get that chop where it's just, bullish engulfing, bearish engulfing, bullish engulfing, bearish engulfing. I think one of these past years we did have like maybe four bullish and bearish engulfing candles back to back in like the 4-hour chart in one day. So it's like a couple, and yeah, super choppy, but they are self-confirming. but I would still wait for the confirmation if the stock isn't looking too healthy, right? If your stock's healthy, it's looking good on all time frames, your market's looking good on all time frames, you know, you're going to be more inclined to go and pick this up on the confirmation of the bullish engulfing itself, which is fine as long as your biases line up with your decisions when you're trading. Okay. So bullish reversal candle, morning star. So kind of like the one before, below is referred to as a morning star candle because it completely below both of the candles in front and behind it. This is a 3-star pattern formation, and none of them should be overlapping each other. They should all be separate and not touching. All right. Then third candle should gap up, right? First candle gaps down. Okay, second candle forms a small candle, and then third candle gaps up, finishes inside of the body of the first candle. Okay, so requirements: at least 3 candles down, large bearish candle 1, and then gap down, then upward gap towards next to open, 3 confirmation. So if you have all 3 of these, it's confirmation itself. You don't have to wait for another candle to close above the high. You can if you like, but the 3 itself, when formed, it's confirmation that the trend is going to reverse. Okay. All right, so those were the bullish. There's one more bullish one, and it's a piercing line reversal. And it kind of looks like this here, or like this one here. Either one of these two, because they do the same thing. So here we gap down and then rallied on up and then closed halfway to this candle. Here, gap down, rallied up, and closed at least halfway, above halfway, but at least halfway of this candle. So those would be considered piercing line reversals. So piercing line reversals are when the stock is in a downtrend, it pushes lower, then it reverses, closes above the previous candle, well, not at least above the middle of the previous candle. So at 50% of the previous candle or higher, it closes above that, and that's a nice piercing line reversal. It does need a confirmation, a next day candle above its previous high or above its high, and then that should confirm it to go higher. All right, let's go into bearish reversal patterns. Okay, so bearish reversal patterns, you got to keep in mind that now we're going to deal with uptrends, right? Stocks that are in uptrends. And we're going to take a couple examples and look through these. Once we get through all this, we're going to go into the charts and look through some. But here with the bearish reversal patterns, we're going to be looking at the uptrends, and we're going to be looking for resistance. So resistance at the uptrends, and then confirmation after those. So in this section, we'll cover bearish reversal patterns. These types of patterns are found at the end of a trend lasting 3 to 5 candles. Can be longer, you know, remember that 3 candles form a trend, whether up or down. In this situation, we're going to be considering the uptrend, as these are bearish reversal patterns. A trend needs to be established before any reversal pattern occurs. Okay, so we went over all this, right? So here, same ideas as the previous ones. This here, the sellers are in control. We have a bearish engulfing candle, which this opens up at the highs and sells off continuously to the lows with no stop, no wick, no nothing, right? And then this candle at the top of a trend is considered a topping tail candle. Now, this candle starts off as a bullish candle. So like it could be a bullish engulfing and rally on up, and then the sellers come in, and say, okay, you've had enough of a run, so now we're going to pull you back. We have a lot of supply up here, so then it comes all the way down and then some, right? So that's going to be major rejection, right? Topping tail candle, major rejection, too much supply is going off. The buyers are tired. Buyers are tired, they need to take a rest, okay? Middle candle, just general bearish candle. Could be a bullish engulfing, you know, could do piercing line reversals, all that stuff, but typical bullish channel. And then we have our indecision candle. Indecision candle that is pushed to the bear side, but still indecision candle. And if you see one of these candles, you have to wait for the next candle, because the next candle is going to give you confirmation to what to do, if it's going to reverse or not, right? All right, now the next candle here, this is going to be called a hanging man. So this happens when you're in an uptrend, and then this candle appears as, you know, it opened up and then sold off all the way down. Then the bulls came back in the lows of the day and pushed it all the way back up, but couldn't push them out. So the bulls gave it all their last hoorah, couldn't do it, and then this forms a hanging man, meaning, you know, typically when you see these, you're going to see them next to a candle, and I'll show you that in the example as well. So here, bearish engulfing candle, we gapped up above the previous candle, sold off, extremely engulfed that candle, and then it is self-confirming. Remember that bullish and bearish engulfing candles, they are self-confirming, but if you would like to have a confirmation, you would just wait for the next candle to close below the lows of the bullish or bearish engulfing. Now, remember, for our bullish reversal candles, we wanted to close above the highs, right? The highs of the previous candle, we need to close above the highs. And then we should, you know, break out, take off. Why? Because we're making higher highs. Now, for the bearish reversal candles, we want to break the lows. Now, we want to break the lows because we're trying to change trends. And if we're making lower lows, that's going to be good for us, right? If we're going to be in this bearish trend, we want to see lower lows and lower highs. So confirmation is close below that low, and that's going to give you the go signal. Now, you could do that just by getting in it, but you're going to be taking on more risk because there are some days that are very choppy, especially with bullish engulfings and bearish engulfings. All right, now we have evening star. Now, so we just had the morning star, right? And now we have the evening star. Now, the evening star should not touch any one of its candles, just like the morning star should do. Each one should have a gap. Now, it typically is a small candle in the top of the gap. So this one has a little hammer candle as the evening star. And typically it's either a doji or hammer candle, little candles. And it gaps down, sells off hard. This is confirmation. So it's a 3 pattern, and we have the gap up, the gap down, hard sell off. There's your confirmation. Okay, we don't need to wait for another candle to close below this low, because this one is our confirmation. Okay, it's a self-confirming pattern. All right. So bearish reversal, topping tail doji. So topping tail doji, we talked about this a little bit earlier, but when we're on an uptrend and this here 320 is resistance, right? It's hard resistance, because we come up here, we get stopped there, resistance, come here, resistance, come here, resistance, come here, tries it again, makes a new high, but comes back down, and it's resistance. Then push it down, and then here again, popped up again, and then resistance came down and pushed it even lower, and then this fell hard. Okay. Now, it's just all about supply. If you're hitting this resistance and you're having trouble like this and you're consolidating sideways, the best move is actually to get out and leave that stock alone, because consolidation kills accounts. So that could consolidate for 2 weeks, 3 weeks, a month, however long it may be, right? So this consolidation here lasted quite a few days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So 16 days of consolidation. 17th day finally gave it up. Okay. All right. So this was that hangman I was referring to you guys to. So typically here, we'll see a hangman either right next to a bearish engulfing like we have here, or we'll see it right next to a bullish candle right next to it, signaling that we've hit a top. And I think I've seen one of those today, but I can't remember what stock it was. But hanging man, it's referred to this because it completely closes at or near the opening price after it rallied from the day and put in a low. The big body of this pattern shows buyers exhausted in the market, meaning that the bullish trend is coming to an end and sellers are being met. This shows bulls gave it their one last punch, their one last shot to push it higher, and the sellers said, no, it's time to go back down, and it sold off. Now, pattern recognition, 3 candles up, a long wick near the lows of the day, and a bigger body at the end of the day. Confirmation of trend reversal is either a candle that breaks the low and closes below it, or just like this was a bearish confirmation, which is a bearish engulfing, eats that and then starts its downtrend. All right, now we have the bearish Harami, just like the bullish Harami, which she is pregnant with the opposing trend. This is a big green candle, and it is pregnant with a bearish candle, so it's going to give a bearish trend. The confirmation is going to be closed below the low of the baby candle. Now see here, we had a doji right after the Harami, and then after the doji we had a big bearish engulfing. Now that bearish engulfing takes out this doji candle because it completely engulfs it, removes it, and that didn't happen. So then that is confirmation for the Harami, even though we have that doji right in between it, right? So because it's a bearish engulfing, it eats that candle, and that candle doesn't even exist, right? Because it just wiped out its whole day. Didn't even exist, basically. All right, now we have our last one, which is our dark cloud cover. Now, we talked about the piercing line reversal, where you could gap down, rally back up at least to half of that previous candle. Now, with the dark cloud cover, we gap up on a bullish trend, and then we sell off at least to half of the previous trend. Half of the previous candle. And then the confirmation for this one is going to be another candle with the close below the low. And then once that closes below the low, that shows that there's suppliers up there and we are coming down. There's too much supply going, there's too much supply to meet this demand. So we're gonna bring it back down and meet that demand, okay? All right, so let's go into the charts and start looking for some of these. Now, does anybody have any questions over them before I really get into looking for them?
Hey, Steve.
Hey.
Can you hear me?
Yeah, loud and clear.
So normally, do you use the candle or this analysis with the daily chart? Is that what it is, or like just hourly, or how do you go about it typically?
So you're gonna be using all of these patterns on all the time frames. You're gonna really be looking for your higher time frames always with the top-down analysis, but you could find these patterns on any time frame. So basically, what you're gonna be looking for is what time frame you're gonna be interested in, right? Are you gonna be swing trading? So you're gonna be looking at the daily, the 4 hour, and then 1 hour. If you're going to be day trading, you're going to be looking at the 1 hour and the 15 minute. So whatever time frame you're trading is where you're going to be looking for these patterns at, right? And you're going to be looking at these patterns at strong support areas and strong resistance areas. So let's see here. This is an hourly chart. So we'll come back here. So here we had, let's see here, open 788.53. Let's see, the close on this one was 788.12. The open on this one was 788.53. So this is actually a bullish Harami, even though this is a pretty big candle. It's inside of this candle, and then here for this candle, we closed above this high, making this one a higher high. So this 3 candles down at least have a bullish Harami confirmation and then pushed up, right? Came down here, went sideways, came down here. We had a topping tail here and a bearish engulfing here that really pushed this down. Now we got to be careful with this sideways action because sideways action is not really a trend, right? It is just consolidation. So typically when you have sideways action, you're not going to be looking for reversal patterns because you want to see reversal patterns in the trend, right? So we want to see an uptrend and then possible reversal here and then down, right? That'd be a nice trend up and then trend down. But then they try to fake you out like, oh, it's forming a bull flag, and then they sell it off. Okay. Let's see. Any other? So I don't think this candle is closed. Oh, yeah, it is closed here. So here, this was actually a dark cloud cover, but then it didn't really get a confirmation. Went sideways, pushed up. Wow. Put my glasses on here. No wonder my eyes are hurting. Forgot my glasses. All right, here we go. Is it better? All right, let's zoom out here. All right, here's Here's a candle that gapped up and then closed halfway, and that is a dark cloud covering. This candle broke the low but closed flat, and this candle continued to break the low. So we didn't get a clear confirmation. We did make a lower low. We didn't close lower, but we did make a lower low. We didn't get a clear confirmation, but steadily went down. Here, let's see, is that a gap above? Looks like it gapped above. So another dark cloud covering, and then this confirmed it. Then we came down, sideways, down. Then we had a bottoming tail, right? Bottoming tail doji, pushed up, and then came back down. Bottoming tail, pushed up again. Let's see here. I gotta zoom out. Let's go on a daily. We're gonna see these better. We're gonna see these a lot better on a monthly. So here we have this topping tail, right? Topping tail, which is what? Major rejection. Major rejection here, and then we pushed down lower here. Then reversed here, right? With the bullish engulfing candle here. So basically what this did was it got rejected here, right? Supply here, sold off all this supply, came down here, got demand, pushed up, and then gapped down, still demand right here, pushed up, ate this candle, and then we're pushing up, and now we're in that, we're actually over that demand zone, or we close right at that demand zone, I mean supply zone. So if we push through that, then that is going to be what, right? If we close above, what is this, a monthly? Yeah, so this month, so the high here is 968.99. So if we close above 968.99 this month, does anybody know what that is?
Confirmation of
Breakout.
patterns.
Yeah, somebody said it was a breakout, right? It's a breakout. And why is it a breakout?
You established a higher high.
Yeah, exactly. Now it's going higher highs, right? So on this trend here, right? On this trend, right? 3 candles up, that's a trend, because right here there was no trend, right? It was just sideways, no trend, and then up, 3 candles up, right? 3 candles up, we have an uptrend. Okay, up here, we establish this low, then we go up, and then what do we do here? What is that? Anybody know what that is?
Is that a bullish channel?
Maybe, could be, but what is this right here?
Is that your monthly low?
Engulfing.
Yeah, it's a low, but what is it?
Bullish hammers.
Hammer.
Yeah, it's
Higher
a hammer.
low.
Yes,
Higher low.
exactly. It's a higher low. The higher low. That's it. Now we made a low, we made a high, we made a higher low, and now what are we doing?
Higher high.
Making a higher high. So we're continuing this uptrend. right? And then we could see that better in the weekly chart. So let me see if we do have a channel here. No, right there. So if this is the channel, right, we're at that top of the channel. So we're going to need a big breakout, right? We're going to need a big breakout. We're going to need a big breakout. Why do we need a big breakout? Because if this is channel resistance, which it did hit here and sell off, now we're pushing up again. If that is going to be good resistance, right? We hit that, made a topping tail, came down, then made a doji, right? That doji is more like indecision, right? But then came up, pushed up, hit that resistance again, and then sold off. Came down here, found a bunch of buyers, right? This was a supply area. Okay. Then came back up here, got another topping tail, but on the topping tail, we didn't get a confirmation, right? We actually got a bullish engulfing. Now this bullish engulfing eats this topping tail. So actually this could have a big breakout and push through, right? And we could push to, you know, like 1100, 1050, right? If we push through this 1050 area and we're going to have a big breakout and push through that, that could go to, you know, 1100 even more, and it's going to have a big breakout. Now, why do we have to have a big breakout? Well, because this is resistance, strong resistance. So that means what? Suppliers are there, sellers are there. So here, sellers, and then here, sellers. Okay, so since there's so many sellers right here, then this is going to have to what? Show the strength and push out, big breakout. And not only do we have to push out because of the big breakout because of this resistance here, but we also have to push out this big breakout because this is a monthly breakout into all-time highs. And a monthly breakout to all-time highs needs a big breakout to get through all these sellers. Now, if we break out to all-time highs, what does that mean? That means that there are no more sellers. Okay? There are no more sellers. Nobody wants to sell Tesla no more. Okay? We break out to all-time highs, that means there's no more sellers. There's nobody that really wants to sell. They all want to hold. And they're not going to sell until they start getting higher into a higher price. And then we'll see resistance in sellers at future price targets. Okay. All right. So here we have a downtrend, right? Downtrend at support, which is this 100 day. And then what do we form? Bottoming tail hammer candle, right? Bottoming tail. And then what do we have here? Confirmation with the bullish engulfing. And then we start our rise up, right? Bottoming tail, confirmation, and then our rise up. We never made a lower low than here. We made a higher high. We didn't make anything. Then we made another higher high, then another higher high. That's at least 3 candles up, making our uptrend. And then we continue our uptrend, and we're still in our uptrend here. Now, this isn't going to become a downtrend until we break this low at 900 and then come down and really break this low at 782. And then that's going to be an established downtrend on the weekly chart, right? All right, let's go into the daily and see here. So here we had a sell-off, and then today, that there was a bullish engulfing. So this here was a reversal, right? We have 3 candles that are set up for down, Got 1, 2, 3. Here's third, pushed up, engulfed that, ate that candle. Okay, let's see here. Same thing happened here, right? Sold off here, engulfed that candle, then pushed up. Consolidated a little bit, then pushed up. Let's see. Here we had Doji, Doji, Doji. So even these candles that doesn't have a wick on the top, these are considered dojis as well, because they don't really have a body, right? They don't really have a body. It's like a no body. It's very small body. Those are doji candles. Doji candles are typically indecision candles, or candles that typically close the same price that they opened. So we had doji, 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 sell off, and another doji, sell off, and then here we had an indecision candle. We had an indecision candle here because we had the same wick at the top and the same wick at the bottom. And then we had a confirmation it was up. We pushed up. We made another higher high, right? 3 candles up. And then here we had a little bearish Rami there. Even though that wasn't a bullish candle, it still made a higher high, right? Here, and then we kind of made the doji, and it was pretty much like chopped there. Let's go to another stock here. See what a good trending stock is right now.
Hey Steve, for the bullish engulfing candle, if the body's bigger than the previous candle, but it didn't break the high of the previous candle, does that still count as a bullish engulfing candle? Like for example, on the last 2 candles on Apple, our last candle today was larger in like its size, but it didn't close before that high.
No, it's not.
No.
No, but what is that?
It could
What candle is that?
Bullish engulfing.
No, not a bullish engulfing.
That a topping tail?
Nope, not a topping tail. We just learned this.
Is it
one
a bearish
today.
Harami?
Nope. So what's the opposite of that, right? So what if a candle gapped up and sold off at least halfway of the top of the candle, right? That'd be a dark cloud covering. Now, since this one gapped down and rallied up and closed at least halfway to this candle, what is that candle?
the bullish candle.
It's a bullish candle, but what is it called?
Is that the piercing line?
Piercing line?
Yes,
Bullish
yes, it's the piercing line reversal. So that is a piercing line reversal. So that is a reversal candle. It's just a piercing line reversal. As long as Apple closes the day tomorrow above 345.68, this is set up to continue an uptrend. But it's not a bullish engulfing. You got that one?
Yes, thank you.
Okay. All right. So, you know, they have to in order for it to be a bullish engulfing, it has to eat the previous one. It has to open lower or at the same price and close above it. In order for it to be like this one is a very bullish candle, but it's not a bullish engulfing candle because it didn't open below this one and close above it, right? Let's see here. So here, now what's this candle?
Is
Anybody
that
know?
a dark cloud covering?
Bearish,
Yes.
bearish piercing, right?
Well, it's a dark cloud covering, yeah. Dark cloud covering. So it gapped up. It gapped up big, then sold off to at least halfway to this previous candle. And then this candle closed below this low, confirmed it, and then we kept going down. Even though these were green, they still made lower lows. So, you know, it did form a downtrend, even though the dips were bought here each time. It kept gapping down. So that's the dark cloud covering confirmation, and then kept going down. And then that broke the downtrend. Well, because I guess this would be a piercing line reversal there, because even though this was a green day, we're still making lower lows, gap down, close at least halfway to the previous candle, which is a piercing line reversal, and then closed above the high, the next candle, and then you know, started going up, but kind of consolidating. Let's see here. This is a hanging man. So we come up here, we got a hanging man here, gap up, situation here, close below this low here, and then downtrend here. Here we have a bottoming tail here. So another thing that you guys need to get in the habit of doing is your trend lines, right? Because that's gonna help you a lot, help you tremendously. Your trend lines, okay? That's gonna be very, very beneficial to you, because it's gonna help you tell the story of the price action. So here we have a trend line, downtrend. Try to break it several times here. Couldn't do it here. Couldn't do it here. Couldn't do it. And then we have this beautiful, beautiful bottoming tail reversal candle. And then we have this confirmation breaking the downtrend as well. Okay. So beautiful bottoming tail with a long wick at the bottom, which what tells us that there's strong demand there. Strong demand there. And then we gap up, push up, close above, make a higher high than this. Okay, break the downtrend, and then next candle, even though it's red, it's a red candle, right? It closes the day negative. It's still out of the downtrend. So then this is bullish. Even though it goes sideways, it's still bullish, because it's telling you that there's so many buyers here. It's not gonna let it go. It's not gonna let it go past there. So then here dips a little and then rallies up.
Hey, Steve.
Yeah.
Quick question. So see that reversal candle you just talked about. So if you look at the volume there, so obviously you have a lot more green volume coming in, right? So I guess that confirms like this thing that obviously is reversing.
I mean, not necessarily, because I mean we had nice volume on these two as well, but I mean we couldn't break that downtrend, and then we sold off on heavy volume here. So even though you have good volume here, you got to wait for that confirmation. So on these two candles, we did get good volume on both of them that confirmed it, but you know, we want to make sure that downtrend is broken, and then once that downtrend is broken, then we're going to be setting up for a new trend, right? Because this trend was down, lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, and then here, even though this candle was a negative day, it still made what? A higher high than these highs, right? So remember, I told you guys since the beginning, we're always you want to dig that in your brain. Higher highs, higher highs, higher lows, bullish, uptrend. The trend is your friend. Lower lows, lower highs, bearish. You know, the trend is your friend. So even though every dip was being bought here, right? Even though every dip was being bought here, we kept making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And then finally, this candle here, well, I mean, we reversed, broke the downtrend. This candle here made its first higher high. We made our low, made our higher high, right? Higher high than these highs. And then we made another higher high the next day. Didn't make any of the lows. Made another higher high this day. Then made a low this day, but never broke this low. And then made another higher high and then continued on making higher highs, right? And continued making higher highs. Higher high, higher high, higher high, higher high, higher low, higher high, higher low, higher high. Another higher low, higher high, higher low. A higher high, and then this is going to be a higher low. If this reversal is confirmed, this is going to be a higher low, and then it's going to go and push to make a higher high, right? Because now we are in a bullish channel. So let's see here. See what this bullish channel is. There it is. There's that bullish channel. And this bullish channel is hitting right on that support. So as long as that holds, we should be pushing up towards either the upper end of this channel or just trending up. So we're gonna break these highs eventually, right? And looks good. All right, so we got that piercing line reversal here. Let's see, let's go to a different time frame. Oh, we're also breaking out of this previous high, right? So here on Apple, we have a low, right? We broke these lows here on this. We had an uptrend here. Then we broke those lows here, creating a downtrend. Then here we made a high, a higher low than this low, and then here a higher high, a higher low, and then a higher high, and then here a higher low, which actually back tested this previous high here. And then now we're pushing and breaking out to a higher high. Now if we continue, we should go a lot higher than this high, because if this previous high was resistance, right? Can anybody tell me what happens when previous high is resistance and then we're above it? Anybody tell me what happens?
It becomes
support.
becomes a support.
Exactly. So previous resistance becomes support. So now if we're above this previous resistance, which caused this sell-off here because there's supply here. Now if we're above that and we're holding, then that is going to tell us, as long as we hold 330, that's going to be solid support, and then we're going to go higher. Now we do have a topping tail on the weekly from last week, but this candle isn't confirming yet. So as long as this candle does not confirm it this week, we should go higher. Now, if this candle does confirm it, guess what? We're going to go below that support. right? Because we're gonna have a sell-off, and we're gonna have a red candle or a negative week, and this is gonna go down, and it's not gonna hold 330. But now, if it holds 330, we should go higher. So let's go look at what 330 is. Okay. So we could already see, you know, that was solid resistance right there. We already see that right there. Okay. Now we come over here and we see that, okay, we had a big candle through it. That's a good sign. Strong resistance, strong support. In order for them to break, they need a big candle through it. Okay, so they need a big candle through on good volume. So this was okay volume. It was about average volume. Pushed up. Let's see, current. This one was about 34,003 or 34,300,000. So that was good volume because today we had 34,700. So pretty much almost the same volume as we had today. Yeah, they look pretty similar. Yeah, so we had 100% of average volume, or 101. So 100% of average volume pushed through that resistance and then held it here and then pushed up higher. Came back, didn't come back to touch it because of this support. So as long as we confirm this, we should be on our way even higher because of this 330 support is going to hold as support now. Now, my only concern on this is what? Can anybody tell me what would be my only concern on this entire chart, including the indicators of what we learned from lesson 2?
The stochastic.
Okay.
Like
that
maybe we
that could be a
topped.
concern.
Stochastic, and there was also a cross on the DMI.
That's what I'm looking for. That DMI average. That DMI average. Now, what does that tell you?
It's below.
Buyers are losing.
Indicates a change is coming.
Right, right. It indicates that buyers are getting a little tired, and there could possibly be a trend change soon. Now, does it mean that it's going to happen right away? Not necessarily. It's just telling you, hey, be cautious. There could be a possible trend change soon. So we are below that average. That average is high. So it's telling us, hey, there could be a possible trend change soon. So we have to keep in mind, are we going to confirm this piercing line and head higher? And are we just going to turn around and get back over that average? Or what? What's going to go on? Because we, let's see here. This average crossed here and then try to get back over and then fail to get back over. Okay, pull down. So we'll see. Does it try to come back and get back over again, or do they start to separate? And if they start to separate more and more, then that's going to tell you, all right, there's going to be a pullback soon because there's going to be a trend change soon. Okay, so we go to a lower time frame to check that out and see, okay, we had, you know, the red DMI kind of took control, but then the green DMI came over. So the stochastics right here hit below the 20, crossed over. So that looks good. So on our lower time frames, actually looks good. We broke the downtrend. Here. So that looks good. We still made a higher low from this lows, right? Even though we made lower lows here, on our trend, our overall trend, we're still making higher lows. Okay, so let's go to our 1 hour chart. And then we check that out here. And we see low, mid, okay. Stochastics good. Everything looks fine on the hourly chart. So in a shorter time frame,
Steve, didn't
things look fine.
oh, I'm sorry for interrupting. The 20-day SMA crossed the 50 and the 100 also, right? But it looks like it's curling back up.
What, on the hourly?
Yeah, it looks like it was 2 days ago, maybe after hours it crossed, but it looks like it's curling back up now.
Yeah, I don't pay attention to these, the moving averages on anything lower than the daily.
Oh, okay.
So daily, weekly, monthly are the only ones that I look at. For lower time frames, I look at the VWAP, and that's about it. And then I have my daily SMAs on the charts. But on lower time frames, the moving averages, it's just noise. It's just noise. Because they cross all the time. They cross all the time there. All right. So yeah, that's what we're looking at. So we have one concern. So basically we can't put all our money into, you know, Apple. Let's see. We could look at the Qs, right? The Qs. Look at the Qs, and the Qs held that 20-day. So that's a good sign, right? Because what is that 20-day? That 20-day is like an uptrend line. So here we lost that, you know, and lost all the moving averages here. Came down, then got most of them back here, and then got the 20-day back. And we've been respecting that 20-day as an uptrend line here. Every time it hits it, bounces. Here it bounced and it pushed, and it barely, with its last little breath, closed right above that daily support. But it could not close above this candle, but that still put in a piercing line reversal. So as long as we're above 238.7, we can push above. But the only thing I don't like about it, I mean, we had good volume, not as good as these, but it's pretty good volume. The DMI red tried to cross, but now the green is kind of, they're fighting right now, right? They're fighting right now. Stochastics are still heading lower, so that's, you know, a concern for me because the stochastics haven't turned yet, so that's a concern for me. Let's see, 4-hour chart here. So interesting thing on the 4-hour chart, there was not a bullish divergence like there was on SPY, right? There was a crossover yesterday, but the DMI crossed over the red. Not yesterday, Friday, crossed over the red, and now, you know, that's coming down. It's moving. They're separating from each other, and the green's coming back up. But there was no bullish divergence on the RSI like SPY was. There was a crossover on the stochastics, which is good, right before the open. Let's see, on the 1 hour, was there? So the 1 hour did have, did it? It did have a divergence on the 1 hour chart. So 4 hour didn't have a divergence, but the 1 hour chart did have a divergence. So here we made a low, and then here we made a lower low, but we made the same low on the RSI, okay, creating a divergence. Okay, here we are at the average line, so we need to get above that and start pushing higher. Okay, now we did do something after hours, which was very good for bullishness. We broke this previous high, right? So here we have a high, a low, a lower high, a lower low, a lower high, and a lower low. Now we broke this previous high, creating a higher high. So now, even if we pull back, we could pull back to create a higher low and then continue to push. But go back to daily. Yeah, daily's all right. Daily's all right still. Don't like the stochastics right there, but daily's all right. The weekly chart. So now the weekly chart put in a topping tail indecision candle. It's more of a topping tail, but it could be an indecision candle. But here, as long as we close this week above 240, or actually 239.54, as long as we could close this week above 239.54, that is going to be a bullish engulfing, and this is going to be, sideways pattern, and we could continue sideways, or we could actually go and break out. So the weekly chart not looking too bad, considering that this could be, a bullish engulfing. Now SPY looks a little bit worse, like a little harder to do, because on the weekly chart, it needs to get over 320.22 in order for this to be a bullish engulfing. But if we get at least halfway, that's going to be a piercing line reversal. So, it still has a chance, right? Still has a chance. It'd be better for bullish engulfing because that shows how strong it is. Piercing line would work as well, but that's all right. So here we had a piercing line over the day, and we closed above the 20 and the weekly support of 305.45. So that's good. Most likely if this has another green day tomorrow, it's most likely going to come fill this gap here. Now, if it fills that gap and then all of a sudden we have some news and then we sell off, then that's going to be, a different story. But here we have a crossover over the red DMI. The stochastics here are fast one is going towards the 20, and the slow one is still, barely making its way over the 80. So that I want to see those a little, come up a little bit. Whenever the stock price action is moving faster than the moving averages or the indicators, it'll slow down for them to catch up. Okay, so keep that in mind. So whenever you have these high flyers like Tesla, Nikola, whatever it's called, and all these other ones that, or Amazon too, they'll make the big moves, but then they'll consolidate for a while, for a long while, and they'll just kill options. And it's allowing the indicators and the moving averages to catch up with the stock. So it just, goes sideways for a while so that the moving averages and the indicators could catch up. So keep that in mind if you want to trade those types of stocks. Let's see. So here on the 4-hour chart of SPY, we have lower low, lower low, lower high, lower low. But then here on the 4-hour chart, we had that divergence, that bullish divergence. And then the stochastics, right? The stochastics, both the slow and the fast were below 20. And then what happened? They crossed over. Okay. So that looks good still, right? Looks good still. RSI now is above 50. That's strong. Okay. DMI green is crossing over. That's strong. Okay, so we're getting a crossover all on the 4 hour, all across the board. Got a crossover on the stochastics, crossover on the RSI, crossover on the DMI, and momentum is moving over as well, crossover there. And we got okay volume, 135% or 137%. That's pretty good volume. So that looks good for higher. So we can definitely, we're almost at 311. Okay, we could definitely push through and fill this gap, right? 315 could come as well. But don't be surprised if there could be a pullback, right? And then a push, right? All right, so we good on these indicators and what we're looking at right here? Anybody having any issues with looking at the indicators at all?
I usually got to go back and review the class a couple of times until to fully understand it.
That's okay. That's completely normal. It's a lot of information that I give you guys each class, and as I go on, there's going to be more and more. So that's why you got to build upon it, right? And reviewing it, you're always going to learn something new, or something is going to click, or something is going to have that aha moment, and that's fine. You know, I go through this all the time and review, and I always have that, oh wow, I need to do this differently. You know, you always get better by going over it. Nothing wrong with that.
Hey, Steve.
Yeah.
Right. Yeah. So we just got a quick question on the TTM squeeze or the momentum. So see, like when you have those green dots that start to appear, right? Do you, or is that normally construed as a change in momentum necessarily, or how do you interpret that?
Say that one more time.
So on your TTM squeeze, right, you have those green dots, or probably like green dots. You know, do they necessarily represent any kind of like change in momentum, as far as like from being bearish to bullish?
No, not at all. The green dots just mean that there's no squeeze, right? So the red dots means that there's a squeeze forming. There's a squeeze forming, and what a squeeze means is basically it's just consolidation. So the price is getting consolidated. It's kind of winding up for a move. So the red dots tell us, hey, the price is winding up for a move, and then the green dots tell us, hey, it's firing, or there's no squeeze, basically. So when you have, let's see. So here we had, a bunch of dots lining up, and then it fired here, right? Fired, or actually it fired here. So here, it was telling us, hey, we're consolidating, right? We're just going sideways, sideways, sideways. And then here we fired the, right here, we fired the squeeze. And now we started pushing and we made new highs, okay? And then after that, they continue to be green, but then it just came back down and then sold off. And then here we said we had another squeeze, and then it fired right at the open to push down. We had consolidation, and then squeeze fired, and we're heading down. So it's just telling you when like a big move is coming. It has nothing to do with anything else. And when the dots are green, just telling you that there's no squeeze.
Okay, thank you.
Steve, when you look at the stochastic, if it's showing it's oversold, do you usually get wary about it about to drop?
No, I don't. Because the stochastics could be up there for quite a while. But when the price action is telling me, hey, we're coming up near resistance and we're forming a reversal, and then I see the stochastics coming below 80, then I'll say, okay, we got an issue there. So remember, your price action is king. So on the hourly chart, or 30-minute chart actually, we do have a crossover on our average, on our DMI. Stochastics is over here, but they're just flowing. But we gotta keep in mind about that 30 minutes. So as long as this, it's probably gonna hit this target, and then it's probably gonna come back. Hopefully it doesn't come back before open, but most likely it probably will, just because that's how the market is. But we'll see. We'll see. And, 30 minutes is a short time frame, so 15-minute is, on it. So we'll see. 4 hour chart looks good though. So either way, we broke this previous high, so that's strong. The only problem is now is there's not another previous high until this high here at 322. So if we push, our next resistance point is going to be this gap fill area, 315, most likely 315.40. And the beginning of this gap, right? So the beginning of a gap and the end of a gap, they're going to be resistance points and support points. Now, why is that? Is because there's orders there, right? So it gapped over that huge gap area. So there was institutions and mom and pops that had orders there to buy SPY or sell SPY, either or. There's supply and demand there. Okay. Now, since there's supply and demand there, once it hits that area, it's going to start to fill that supply and demand. Now, whether that's going to be demand, which is going to help it and pull it up, or it's going to be supply, which is going to resist it and not allow it to get through, we don't know. We're going to have to see when we get there. Okay. But price is attracted to those gaps. Now, why is it attracted to those gaps? Because there's orders there. It wants to fill those orders. The whole purpose of the market is to produce buyers with sellers and sellers with buyers, right? It's all supply and demand. So if there's an area where there's major supply and demand because it's got gapped over or gapped under, then it's going to want to come back to those areas because it wants to fill those orders, because that's its purpose. But I mean, I still like that bullish divergence, so I think we still go a little higher. All right, here we have, we had these tails forming, then here we had this tail forming, and then we have this bullish candle, bullish engulfing candle actually, and a push higher. Okay, now you got to keep in mind, right? You always got to keep in mind. So one thing you need to put on your checklist in the morning is I need to look for any divergences. Okay. Now, any divergences is RSI divergence, a DMI convergence, a stochastics divergence. Yeah. What is a stochastics divergence? Well, you're hitting lows, but then your stochastics is turning up, right? Turning up from the 20. You're thinking, okay, well, that is signaling that we're at a bottom of the fast stochastic is pushing over the slow stochastic. That means we're turning over from the bottom. Now, the RSI, if the RSI is making a higher low, but then you're making a lower low, that's a divergence right there, right? If your price action is hitting new highs, but then your average is like way over here and your green is way down, right? So like right here, right? Let me stamp that. Right here, it already told you on the day, 2 days before, the pre-market before and the day of, the day before, it told you that, hey, there's a possible trend change coming. And then the next day, that trend started to change, and it changed fast, right? So that was a divergence right there. So whenever you see these divergences, you need to keep in mind, hey, not only did the DMI average tell you that we are going down, but the stochastics had told you the day before as well. So with those two, you could be like, hey, I need to be more cautious because I'm having two of my indicators tell me that there could be a trend change. And also your momentum was telling you as well. Your momentum was decreasing rapidly, actually, rapidly. And then by the time it got there, it was already down, pushing down. So you got to keep that in mind. There's been so many times where I'll have an opinion that I made either the night before or the day before, and then I go in that morning and I look at the charts before the market opens and I see a divergence, whether that's a bullish or bearish divergence. I look at that divergence and I'm like, oh man, I gotta change what I was thinking, because there's a divergence here. That divergence isn't created in a day. It's created over a few days. So it might not be evident until that day, but it's created. You know, they were buying it up, yes, or on Friday they were buying it up, right? And then, you know, they were buying it up even more this morning, and they were pushing it up higher. So all the stuff they bought yesterday at the lows or whatever they bought it at, they're already making money on it because it's already up higher. And that's the divergence. They're buying in the weakness, even though it gaps down even more. They're going to buy even more because they know they're going to be able to push it up higher than they bought it for. And that's the whole goal. Sell it higher than you bought it for. Okay. So you got to keep in mind on those, and you're going to look at bullish and bearish ones. So that's saved things for me before. Like this past weekend, you know, I had, you know, so many birthday parties to go to. I had my mom's and my cousins, all these birthday parties. It's hard for me to get any work done. And, you know, in the morning I came up and I was like, all right, we had these gap fills. Maybe we're going to go into these gap fills. That was the initial thinking. And then I saw these bullish divergences. I said, all right, we're not going to go into these gap fills. We're going to break this downtrend and we're going to run up. So got to go heavier calls. And then boom, worked out great, right? It's all about being aware of that. If I didn't do that, and if I just kept that mental mindset of, oh, we're going to go fill these things, I would have been, you know, jumping on trying to short the morning and trying to get into puts, trying to get into the lower end gap fills, and then I would have got killed, right? And then I would have maybe took a little longer to get in calls and not have made as much. So you have to keep in mind that those little things, they're very important, very important. They could save you. All right, guys. Sorry, I'm going on a little rant. Let's go here. So here we have a little Morningstar reversal there. Gap down, small candle, gap up, bigger candle, and then pushed up. And then here came back down, broke that. But didn't last too long. We actually had that dark cloud covering, no confirmation, but just went sideways and then came back down. And then we had it again, gap down, little candle, gap up, and then up. All right, let's see, what do we have here? Here we have another piercing line reversal here. So here, sold off, gap down, pushed up at least halfway, confirmed candle here. We even though we gapped down here, we closed up above this previous high, and then what do we do? Gap up, and then we ran up here, and then here we had a bearish engulfing candle here. sold off here, and then here made a new low, here made a new low. Now what do we have to do? We made a new low, made a new low, made a new low. In order for this trend to break, we have to what? Make a higher high. Now, making that higher high means we got to make a higher high than 312.15. So 312.15, once we make that higher high, that's going to tell us, hey, we're going to possibly fill this gap up at 317. Okay, all of these reversal candles. This reversal candle. Now why is this reversal candle so important? Well, not only are we outside of this channel, so you would think, oh, let's go full bearish, but we're outside of this candle, but we formed a reversal candle on very important levels. This 302 is a previous high, okay? This 305.45, that's a weekly support. Weekly supports are very strong, okay? Now, the previous highs at 302 is these previous highs, right? What is past resistance? That's support. So as long as that past support, or my past resistance holds as support, that's going to be a good level to buy at. Okay, and that's where it hit today. Well, it hit actually the past 3 trading days, but it reversed on that today. And where do we look for reversals at? We look for reversals at strong areas of support. So not only do we have a strong area of support at 302.10, but we also have a strong support at 305.45. And we also have our 200-day right here, and we have our 20-day, which we close both above. So now we got to see, can we close above this 312.15, break that high, and then continue to make higher highs and then get back in this channel. So you could get outside of a channel, right? But when you get outside of a channel, if you're not supposed to get outside of that channel, you have to immediately get back in that channel within the next couple candles. So here we're outside this channel by 1-2 candles, but if we could get back in that channel by next candle, then we should actually be good to go to actually save this channel and continue higher. Now, if we can't get back inside of this channel and we reject here and then we sell off, then that is going to tell us that, hey, we're possibly going to head lower to test not only these lower supports here, but to gap fill here. Okay, and it's all about that channel. We need to get above that and inside of it within the next day or so, because we're already outside of this, right? So that's there. What is a bullish channel? Anybody remember what a bullish channel was?
Bullish channel is where it continues to uptrend, continues to make higher highs and higher lows, and they step it slowly, I guess, or
right,
in phases.
But what is it? What does that mean, right? What does it mean when you're doing it, right? Say you're in a controlled bullish run, right? So they're controlling this bullish run, right? So the market makers are controlling a bullish channel. So they buy at the support, they sell at the resistance. They're controlling this bullish run to make it in a formed pattern. Now, when you're outside of that pattern, they have to get it back inside of that controlled bullish run if they want to save that controlled bullish run. Now, if they don't, then it's going to break down. It's going to form something else, right? So whatever, the agenda is, it's going to be. But if this channel is going to be saved, we need to get back inside that channel within the next day or two. Other than that, if we can't get back inside this channel within the next day or two, then we're gonna head down. We're gonna head lower. But it looks good to get back inside that channel. It really does. So, all right. So, what I want you guys to do for homework is, I want you to look for these reversal patterns, right? I want you to look for these reversal patterns, and I want you to, you know, whether draw a resistance point or an uptrend point or a downtrend point, and I want you to highlight the reversal, right? So here we have a reversal. So what I'm going to do is go to my oval, and I'm gonna highlight it, you know, and then I will say, you know, whatever it is. So this is going to be a piercing line and confirmation. So piercing line and confirmation. So piercing line and confirmation, and highlight that, and then screenshot that. I just want to know that you guys are getting that, getting the concepts and understanding the price action. All right. Have any questions on any of this?
Hey Steve, this may be a dumb question, not sure. I'm switching platforms, so I'm like kind of new to TOS. How come it shows like certain candles like that are red candles, but it shows them in a green color? I was just wondering that. Like it'll show, you know, a candle where I can tell by the volume that it's a red candle because there's more selling volume, but it'll show it in like a, you know, a green color.
That's lesson 2. So we've put on the TTM trend. So the TTM trend, so TTM trend only shows the uptrends and the downtrends. So uptrend is green, downtrend is red. So it doesn't show the candles as red or green days. Now the red or green days are going to be hollow for a positive day, and then solid for a negative day.
Okay.
So the TTM trend, and it's put there for a quick mental note. So if I look at this right now, I could automatically see that we've been in very long uptrend, and these red spots have been consolidation before another push higher. So now I see here we're at this red point again, and it looks like consolidation again for a possible another push higher. I go to my weekly chart, and I see that, okay, we were in a downtrend, and now we are getting outside of a downtrend, and now we're in an uptrend. So right automatically, the green shows that, okay, we're in an uptrend. The red shows that we're in consolidation or downtrend, right? So here, this was consolidation, this was a downtrend. So basically, it's just going to teach your mind that when it's green, you know, that's going to tell you the stock is strong, we're in an uptrend. When it's red, it's going to be, hey, be cautious here. You're either consolidating or you're downtrending, okay? So it's just like a quick mental note. You could go to any stock chart and see the colors right away and see, all right, is this stock uptrending, downtrending, or is it going sideways, right? So I like it. It benefits me. I like it better than just how it regularly is. Here, you know, it says we're downtrending, which we typically are, but once this breaks back up above here and breaks this high, it's going to turn green, and we're going to start uptrending again.
Okay, thank you for that quick overview. I'll go back and review that again.
Okay. All right, any other questions?
Hi, Steve. I have one question. What is the best way how I can practice for the candles, how to learn?
What do you mean?
Like practicing like to figure out like which candle it is.
Go through your charts. Go through your charts just like how I did it, and go through them and look at your resistance points, look at your support points, and then go look for the candles. Go look for the candles that you learned today. And look for the patterns, and then identify them. That's how you're going to learn, by doing.
Okay, thank you.
And you can do that on any time frame, hourly, 4 hour. It's going to be the easiest on your monthly charts, right? So here, right automatically right here, I could see, okay, we're hitting at the top of this resistance point. Here we have a bearish Harami, and then here we have confirmation, or even we have a hanging man and we have confirmation, right? We come down and then we have an indecision candle, and then we have a confirmation. We come up, we have a doji, and then we have a bearish engulfing, okay? And then we come down, another bearish engulfing, and then right here we have a piercing line reversal with the confirmation, and then we head higher, then we have a bearish engulfing, and then we have a bullish Harami. Okay, pop that up here. We have that confirmation because we closed above the baby. Then we go sideways and then push up. And then we have another doji, and then a bearish engulfing, confirmation, and then another piercing line reversal here, confirmation here. And now we are forming whatever this candle is going to be this month, right? So just go through your time frames, look for them, practice, and identify them, and then you're gonna train your brain. Remember, we're gonna create those instincts, we're gonna create those behaviors. The more and more you do this, the more and more you look for these things, the more natural it's going to become. I'll look at a stock or a time frame, and I'll be like, okay, this is forming a topping tail, or this is going to form a bottoming tail, or this is going to be a bullish engulfing, or this is going to be a morning star reversal, or this is going to be a evening star reversal, right? So let's see if I could find one really quick. So AMD here, AMD popped higher, right? Gapped up, made a doji, right? Major rejection. Okay, pop down, gap down, sold off. Okay, that's a morning, evening star reversal. Okay, made a new low here, but then here is reversing here, right? We have 3 candles down, 1, 2, 3. Okay, reversing here, piercing line reversal. So tomorrow, if it closes above this high, then this could possibly go higher. Now, not only because of that, is because we held this downtrend, or actually not held it, we actually bought below it here, but now we're getting back above this downtrend and above this 54 level. So if that confirms, then this could push up and continue there. But this is what a evening star reversal looks like. But you just go through your charts, look for them, right? You look for them at resistance areas. Now we know that this here 59 area is a key resistance area, because we see that this here was at 59 area, right? 58.60 sold off, right? And then we know here our all-time highs at 59 area sold off as well. So now if we could come back up, push that through, right? From these reversals, push that through and break these 59 area, it's going to be a major breakout. And then we could push up and push higher, because once we have that monthly breakout, that means there's no more sellers, which means that there's just buyers. So if there's just buyers, the demand is high, and the more people that want to buy, it's going to push the prices even higher, and people aren't going to start selling until these price targets appear. Does that make sense?
Yes, thank you very much.
All right. Any other questions, guys?
Hey, Steve.
Yeah.
Do you think you're gonna review the homework sheets and give feedback?
Yeah.
Okay, thank you.
All right, any other questions?
Hey Steve, I have one last question. It's just that it was part of the first class. I sent you a question on Facebook, but like you said, you were busy this weekend. When we're making our support and resistance lines, like in class you were making the lines off the wicks, and then on YouTube I noticed sometimes you were getting it off like right off the candle, the body of the candle. Do you recommend going off the wick all the time? I know we talked about it in the last class, like you like the wicks, right? Get it off the wicks.
Well, I mean, it depends, right? So, I mean, if you're doing a downtrend or uptrend, yeah, you get it off the wicks. If you're going off just a support line here, you go off of where it's touching the most, right?
Yeah.
So like for this here, I'll grab the wick here, right? And for my uptrend line here, but for this resistance here, I'll grab the point where it's touching the most candles, right?
Okay.
I'm not worried about the wicks.
Oh, okay.
So uptrend, downtrend channels, I'm worried about the wicks. Breakout points, I'm worried about the wicks. With support areas, I'm not really worried about the wicks. Like just diagonal lines or
Yeah.
horizontal lines.
Okay.
Horizontal lines, my bad. But does that make sense?
Yep. Thank you, man. Thank you.
All right, no problem. All right, any other questions, guys?
Steve, I'm thinking Microsoft is going to be harder to analyze because there's not much, like it all just is a straight kind of slow uptrend. Do you think I should change to something that has more stuff going on?
No, what do you mean it's going to be harder? Why is it going to be harder?
I don't know. I don't see a lot of the stuff that we were looking for. It's just all slow uptrend.
So what did it do today?
Slow uptrend. There's uptrend.
Well, yeah, most definitely an uptrend, and it's making higher highs and higher lows. So there's a low, there's a high, there's a low, there's a high, there's a higher low, and there's a higher high, and then here's a possible higher low, and it's all respecting that 20-day, just like what? The Qs, because that's the NASDAQ. The NASDAQ is a Qs. NASDAQ is going to be tech. Tech is going to respect this. So what candle did it form today?
Today it was I don't know. I gotta go back and study more. I mean, I gotta print all this out and really look at it hard.
So this formed the exact same candle that the Qs and Apple did. So that is a piercing line reverse. The piercing line reversal.
Oh,
so
yeah.
Gap
Okay.
down, pushed up to at least halfway point of the previous candle, and closed. So it didn't close as strong as the Qs or Apple, but it still closed the same criteria, pushed at least halfway. Okay, they maybe closed a little bit more than halfway, but this one got at least halfway. So tomorrow, as long as this gets above 190.70 and closes, then this is going to confirm that reversal, and then this is going to be what? A higher low off the 20-day, which is what? Strong support. So that's going to continue the uptrend. So let's go to the monthly chart. Just as we went with Apple, we made a low, we made a high, made a higher low, made a higher high, made a higher low. Now we're making a higher high, but we need to push through this breakout point with good volume, because if we could do that, that's going to be a major breakout. And why is it going to be a major breakout? Because there's no more sellers. Okay, there's no more sellers. So here, this was a topping tail, and then this here was a confirmation of the topping tail, but it never got below this 153.75 support. And then this candle here was a bullish engulfing candle, which completely ate this candle, so it didn't confirm right? Because bullish engulfing candle eats the previous candle, which makes the previous candle obsolete. So this ate this candle, which didn't confirm this, and then now we're pushing up, making higher highs. So we're continuing an uptrend. Now we go to the weekly chart and we see, okay, what do we have here on our weekly chart? Well, we had a topping tail, right? Topping tail reversal candle here, and we're going to see this a lot. Topping tails are probably one of the most the most patterns that you'll see in the market on all time frames. Topping tails, because they're rejection candles. Also bottoming tails we'll see a lot because they're support candles. So here we had a topping tail, then we had a bearish engulfing, which confirmed, right? Bearish engulfings are self-confirmed, but then also it was a confirmation of this topping tail, pushed down, hit support, consolidated, pushed down, and what do we have here? Anybody tell me what this one is?
Reverse hanging man.
Reverse hammer?
What was that?
Inverse hammer.
Yes.
Inverse.
So we got an inverse hammer, right? Inverse hammer. So we see an inverse hammer, and then we think to ourselves, all right, we have wicks, right? So we gotta think critically, right? We gotta think as traders, right? We gotta stop thinking from the way that we were raised, and we have to start thinking more critically, right? Like philosophers, right? More critical thinking. Ask questions. Why is this happening? Why is this doing this? Right? We have to think more critically. So we look at this and we say, all right, Microsoft sold off, but then it kept getting bought up. Even though it kept going down, it kept getting bought up, and now I have an inverted hammer. I just had a bottoming tail that closed above support. Now I'm here, I have an inverted hammer, and then now I gotta wait and see, do we close above that high? And then what do we have next? We have a bullish engulfing candle, so that confirms that inverted hammer. And then we come up here, and then we test this support again. We have a topping tail again, meaning rejection, but then that was never confirmed, and we push up and we go higher. Then we get, what is that? We get a hangman, but then that hangman is never confirmed. We get another indecision candle, and then a bullish engulfing. Push up, sideways action, attempted breakout, and this attempted breakout caused what? A topping tail. Why? Because there's sellers here. All the sellers here caused this. Okay, buyers came in, try it again. So there's less sellers here now. More buyers came in. It's going to attempt that sell point again. Okay, there still might be sellers there, but they're not as many as there were here, so we're not going to get this kind of drop again. Okay, and then we also picked up more buyers down here. So the people that weren't willing to buy here, they were willing to buy here, pushed that up. Okay, attempted to push. Okay, we sold off. But can anybody tell me what is the difference between this sell-off and this sell-off?
The next candle.
Yes, and what is that?
Bullish engulfing.
That's bullish engulfing is right. And what is that? What does that signify? Or what does that show?
Higher high.
Higher high.
No, not a higher high, not yet. But what does that show? Right?
There are no sellers.
Well, I mean, in another way, there's more demand, right? There's more demand because here we had a bearish engulfing. Here we have a bullish engulfing. So here there's a lot of sellers. Here, this might show that, hey, there's a lot of rejection, but we didn't get any follow through, right? So here we had rejection and follow through. Here we have rejection and no follow through. If this candle closes where it is right now, by the end of the week, it's going to be a bullish engulfing candle, which makes this candle obsolete, that it never even existed, right? So then that's already telling you there are less sellers here than there was at this point in time. And we haven't gone over patterns yet, but we will. And in the next lesson or the lesson after that. But this here is a pattern called the cup and handle pattern. So here it forms a cup, which is a, this here is a V, but typically it doesn't have to be a V. It forms like a cup area where it makes a high and then comes back and revisits that high and then consolidates sideways to form a breakout. So here is a weekly cup and handle that could form a breakout. Now, what is that? That is cup and handle because we had major resistance, drop down to find demand, buyers, right? Demand, AKA buyers, then pushed back up on strong demand, then consolidate sideways to find a couple more buyers before it takes off and pushes up higher, okay? So it attempted breakout 1, failed. Okay, if we get a bullish engulfing this week, that attempted breakout is obsolete. Doesn't matter because we have a bullish engulfing that says, you know what, that fake breakout was actually no good. We're actually good though because there's enough buyers to hang out in these levels. Okay, so then it will break out and push higher. So we go on our daily chart and we can see that cup and handle even larger. Okay, we see that push higher here, and then, you know, we gap down and sold off. But then what happens? We come back to this 20-day that's been respecting for a very long time. Very long time has been respecting that 20-day. And if it's respecting that 20-day, what does that mean?
Strong support.
Okay, what is strong support?
Uptrend?
The uptrend, but what creates an uptrend?
Higher highs, lower, higher lows.
Right,
Buyers.
and what exactly? Buyers.
Yeah.
Exactly, buyers. So whoever said buyers, yes, you're absolutely right. So it's demand, right? Every time it hits that 20-day, it goes higher. Okay, it creates higher highs and higher lows. Why? Because of demand. Okay, so it hits those 20 days, pops higher. Why? Because buyers are there. Demand is there. Demand is there. This sold off, hit that 20-day, popped up, came back, hit that 20-day again, popped up again. Now, of course, every time it hits that 20-day, you know, less buyers are going to be there. Okay? Because the more times you hit that support, you know, the more ammo you're using of that support. So, you know, it's only hit it, you know, 1, 2, 3, 4 times now. So just because it hit it that many times doesn't mean like, hey, that's it, it's done. But we just have to be cautious and say, okay, let's look at all our indicators, everything, and make sure that, you know, it's going to hold that 20-day. But if it doesn't hold that 20-day, then we know, all right, this is going to, you know, go to our next area of interest, which is 179.34, because that's going to be strong support. Extend that to the left. That was resistance, 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 gapped over, came back, back tested once, back tested twice, and broke out to the upside. So now we got back into this consolidation here, which is what is that?
Accumulation.
Accumulation, because we're above it. So accumulation, which is what? Demand. So we have demand here, we have demand here, we pushed up on strong volume, sold off on good volume, came back into this demand zone and this 20-day demand, and we held above. So as long as we hold above and we close above 190.70, we should continue higher. Why? Because we're still making low, a high, a higher low. And then we would be essentially, if this is a higher low, we would come to break this higher high to make another higher high. So, Lori, why can't you do this one?
I can. I just This is all just blowing my mind, and I have to print all this out and draw it and study it and watch it for a long time. But you
That's
have shown
okay.
me that I can do this one.
Yeah, you can do it. You can. You can do anything you want. You could do this one.
Yeah.
This is perfectly good stock.
Yep.
All right.
Hey, any
Any other?
chance you might tell us about your V trade on the close Friday? Because I don't understand that.
I'll tell you about it when we get into patterns, because it was an inverse head and shoulders pattern, and we'll go over those patterns in another class, and then I'll show you where you buy those patterns and where your targets are going to be for those patterns.
Like, how does even when it goes up when it's about to expire, why are you able to find buyers? Why can you sell it?
Well, because when you trade stocks like Apple, Microsoft, Nvidia, so whenever you trade stocks that are liquid, meaning they have volume of over, I want to say at least 10 million. Sometimes you'll get away with 8 million, but if you go lesser than that, then you're going to have a little more difficulty. But when you're trading high quality stocks that have extremely high liquid amounts, like this, Microsoft has 32 million shares traded today. So when you trade high liquid stocks, you could find a market for any option that you have, unless the option is worth like 1 cent. You might not get filled on that, because people are the market makers are not going to pay for that. But like Microsoft, Apple 34 million, the Qs and SPY, those are always going to be liquid. The Qs 45 million, SPY is probably the highest. So SPY is 135 million. So that shows you how liquid they are. That shows you how, like, the more liquid a stock is, the easier it is to buy and sell it, because with SPY, you could buy and sell it immediately. Why? Because there's 135 million shares traded. So there's those option contracts are going to sell like nothing. Now, if you go into a stock like see NTLA, where it has only 788,000 shares traded, that's going to be a little harder for you to buy and sell at a good price, and we'll look at, the spreads. So, I mean, this 1750 call, the spread, they'll buy it from you for $1.05, and they'll sell it to you for $4.70. That's ridiculous price, right? So the spreads are just ridiculous on these low volume, low liquid stocks. And that's because there's not really a lot of people trading it. So the market maker is either going to get stuck with it, and he's going to charge you a premium for that. Now, for Apple, right? Apple has 34 million shares traded. So the option contracts, they're going to be a little tighter. So here, they'll buy it from you for $4.10. They'll sell it to you for $4.35. So it's very small, little spread, way different than, the other stock we just looked at. For SPY, it's even better, right? So SPY, they'll buy it back from you for $1.27, and they'll sell it to you for $1.31. That's only a 3 cents or a 4 cent spread. That's a $3 to $4 loss of you buying and selling market orders, which I don't ever recommend to do unless you're trading SPY or Apple or Microsoft, and sometimes their spreads are a little skewed, but not too often. But because they're so liquid, they're willing to buy and sell those, like Visa, 6.7 mil on the day. I think last Friday though it had a little bit more, probably like 7-8 mil. But still, good amount. It's not under anything under like 4 million is a little more difficult. Anything over, I want to say like 7-8 mil, it's a lot easier. Anything over 10 million is super easy. Anything over, over that is cake, right?
So they'll still buy them with just a few minutes left before expiration, because even in that few minutes, somebody else is going to buy them to sell them?
No, not necessarily. It's just, so for that particular trade, I actually bought the calls that were very close to the money. So they actually went in the money. So no matter if they would have expired right there, as long as they were in the money, they were worth value because they were a contract for a given price, and that price was over that price. So I already was in the money for that price, so that had value as it is. So if I actually wanted to hold those contracts, at the end of the day, it was over that price, then they would have had to deliver me those shares, and then I could have sold it at the market and actually made whatever difference it was.
Oh,
right?
yeah, that makes sense. So they'd rather just buy the contract.
Yeah, exactly.
Okay.
Yeah.
That was just fun to watch.
Yeah. All right. All right, guys. Any other questions about anything?
So for the technology sector, the Qs are important or XLK is important? Like which one you preferred?
I like looking at NASDAQ and the Qs. XLK though, you have to see how your stock price action is more similar to the NASDAQ or the XL or the XLK, right? So you need to see which one is more similar. So Apple is sometimes more similar to the NASDAQ than it is to XLK. Sometimes, they have like a little disconnect, but typically they'll usually follow the Qs, which is NASDAQ.
Okay, thanks.
But yeah, look and see, side by side chart and see how your stock, is versus how your sector is, and then how your overall market is, right?
Mm-hmm.
So if you're trading tech, then you actually should be looking at NASDAQ, your sector, and your stock, because
Okay.
the NASDAQ is your market.
Okay.
All right.
Thanks.
No problem. All right. Any other questions, guys?
Did you just want us to highlight one of the indicators and send them to you, or is it just one?
For the crossovers or for the price action for the reversal patterns? For which one?
The homework we're doing.
The bullish and bearish reversal patterns.
Yes.
That one, just highlight them, and that's it. Highlight it and name it, and yeah.
Oh, okay,
so
gotcha.
yeah, highlight and name it. Where did I do that one on? Did I do that on Apple? Or was it SPY?
No, you did it on Microsoft earlier.
Oh, SPY right here. So just like this, piercing line and confirm. Here's that piercing line and confirm.
Got it. Okay. Thanks.
No problem. All right, any other questions, guys?
To get feedback on the homework, you prefer to come to your messenger or the group messenger?
I'll go into the group messenger. That's fine. I mean, I'm sure you guys get feedback from each other, and that probably helps you guys out too.
Yeah, I've gotten a lot of
So
help in there. I appreciate it.
yeah, so whatever's been more beneficial to you. All right, any other questions, guys? All right, I will stop the recording here.